Being the last day of our show this week, we get a view on global market happenings with an outsider. Markets have been focused on expectations of monetary stimulus from key central banks, with eyes also on US company earnings. Developments in the UK are also coming into sharper focus with that Brexit deadline of October the 31st just around the corner. And of course, the US-China trade talks bubble away while the world hopes that simmering drama in the Middle East, particularly as it relates to Iran, don't develop into some sort of war. Well, to give us a view on what's been happening, I'm joined on the line by Lukman Otunuga. He's a research analyst at FXTM. Thanks very much, Lukman, for joining us as usual. So there was much anticipation around the ECB's announcement today. It seems Mr. Draghi hinted at a rate cut. Was the market expecting some sort of movement today rather than the suggestion of one? And how did the euro react?
Thank you for having me here today. Yes, initially there was a 50% probability that the European Central Bank will move forward with cutting interest rates. But what Draghi has done is he's set the stage for a rate cut in September. So investors are now saying Draghi has talked the talk. Now he's going to walk the walk before he leaves the bowl in October.
Yes, he's leaving at the end of October. And I understand that he's welcomed the appointment of Christine Lagarde.
Yes, that is very true. Now, she's seen as a firm dove, meaning that under her lead, the European Central Bank is likely to move with further stimulus. Now, her taking lead is going to increase the probability of the European Central Bank cutting rates, restarting QE, and extending the LTROs.
It does seem as though the German economy in particular has been hit quite hard by the US-China trade tensions. Of course, we know that they're now talking again. And the reason why it's been suffering, it seems, is because it is a significant exporter. And it seems that if those talks don't come right, the EU may likely feel more pain, especially through Germany.
That is very correct. In fact, if you looked at the economic data we had this morning, it was incredibly disappointing. And such figures continue to suggest why the European Central Bank is going to move forward with its easing cycle. Germany is the biggest economy in Europe. Now, when we're speaking about Germany, one thing we have to keep in mind is that there's still the threat of Donald Trump moving forward with those auto tariffs.
Exactly.
And we know how important car exports are to Germany. It's one of the main drivers of GDP. So if this does become reality, this is very bad news for not only Germany, but the whole Eurozone as a whole. And this will force the European Central Bank to take further action in the second half of 2019.
So yesterday, Boris Johnson was officially installed as the UK Prime Minister, and it seems as though he decided to appoint all his hardline Brexiteer colleagues into top cabinet jobs. How has that gone down in the markets? And with a hard Brexit almost inevitable, given the makeup of his cabinet, are we yet able to anticipate what the fallout will be from this?
You would expect the British pound to trade lower against the dollar and every single G10 currency, after he's made such a move. But it seems that the pound and investors are more concerned with the British weather. And this is why the currency was actually enjoying a siesta yesterday. So with Boris Johnson, I feel that markets and investors are not really taking him seriously. As I said with Draghi, he's doing a lot of talk, but most people are wondering whether he'll be able to walk the walk. He's made many promises. He's made many pledges that he will speak with the European Union and restart talks. But Brussels have made it very clear that the terms of exit are not up for renegotiations. Now, when we keep in mind that starting from today, Parliament will be in recess all the way to September the 3rd, the British pound is going to range.
And that means that there's not going to be much of a window, is there, for people to manoeuvre?
Exactly. When Parliament comes back on September the 3rd, we're talking about just over a month for them to secure some sort of deal. And if we do have another scenario where there's early elections or a second referendum, this may force Boris Johnson to, in the end, move forward to ask Brussels to extend the deadline beyond October the 31st.
It seems yesterday Iran tried to extend an olive branch to the United Kingdom, specifically to Boris Johnson, indicating that it doesn't want tensions between it and the UK to escalate regarding those seized tankers. The UK seized an Iranian flag tanker and vice versa. Any worries about how that situation may play out, especially because we know that Mr. Johnson Johnson has a special relationship with Mr. Trump. He's only a phone call away, and we know that Mr. Trump doesn't like Iran at all.
That's a very nice statement that you've brought up, and I would also expect more action in the oil markets, but when we're looking at WTI crude and Brent crude, it traded slightly lower, but today it's around $56-40. And this is what we're saying previously about how markets are starting not to listen to geopolitics, but be more concerned with ongoing global trade developments. And this is what my solution is, or what my conclusion is, that I feel that what's going to drive oil markets should be the progress of US-China trade developments. I think we've said this before, that as long as concerns over slowing global growth remain a major theme, and investors are concerned over a drop in demand or slowing growth, reducing demand for crude oil, the upside for oil is very limited.
And then what about the actual fundamentals of supply and demand? We know that, for example, right now in the Western Hemisphere, it is sort of your summer months, but you will be heading into colder climes, and that's when you guys tend to demand more crude oil.
That's true. In the winter period, the demand for crude oil does increase, and this could impact prices. But at the end of the day, it goes back to it being a simple tale of OPEC and US shale. Oil production in the United States remains at a record high, past 12 million barrels a day, while OPEC is doing all it can to try to stabilize the oil markets. And as long as this battle continues to move forward, we're going to see volatility in oil prices.
Yeah. So we've talked about oil prices. What's happening broadly with key commodity prices this week, and vis-a-vis what's been happening with the US dollar?
I was waiting for you to ask that question, and I've been paying very close attention to gold. I've been bullish on gold since the start of the year, and I'm still bullish on gold right now. Yes, gold traded slightly lower today, but the main themes that are supporting the precious metal are still ever present. Yes, we saw some action in the dollar, but as long as the Fed is expected to cut interest rates at the end of this month, and possibly more cuts by the end of the year, as long as markets in general remain concerned over slowing global growth and uncertainty over trade developments, gold is the place to be.
Here in South Africa, the rand has managed to hold its own for quite some time, trading below 14 against the US dollar. But then Moody's came out today to basically shout out a warning that the recent bailout given to the likes of Eskom, that is of about 59 billion rand over the next 2 years, is in its view credit negative. So can we expect the rand to come under some pressure in light of this latest statement?
This is bad news for the rand, especially given how we have the Moody's rate decision looming over the coming months. Now, if they're already saying this message, this will reduce buying sentiment towards the South African rand. But in the medium to longer term, I think what is going to support the rand is the fact that the South African Central Bank has joined the global monetary easing bandwagon. They've already cut interest rates, and another rate cut in 2019 should be enough to support the South African economy. We're talking about lower rates, boosting consumption, and consumption is a major engine of growth for South Africa.
Yes. So what's been the broader picture with emerging market currencies in general?
So emerging market currencies in general, so there's many ways to look at it. Right now, with the dollar volatility, with the dollar gaining some ground based on markets pricing the Fed not being as aggressive as initially expected in cutting rates, this has slightly impacted emerging markets. But when I'm looking at things by the end of 2019, lower interest rates in the United States, a jump in risk sentiment due to central banks across the globe coming to a rescue, and possible signs of US-China trade talks going in the right direction should be good news for emerging market currencies.
That was Lukman Otunuga. He's a research analyst at FXTM.